Hi, I'm Larry DeBoer. I'm a professor of agricultural economics at Purdue University and an extension specialist in state and local government public policy at Purdue. And welcome to the first of 4 videos that we're putting together today about local government finance in Indiana. And first of all, let me point out that you can find a handout about this topic at the Purdue website. And if we can have that up on the screen, you can see what the address is, and much of the material that I'm going to be talking about today is available on the handout, and so you can get the handout and follow along, or you can use it as a souvenir after we're done. Well, this first video is about Indiana's state budget, and you can see on the title slide that's what we're talking about. And the Indiana state budget is in very difficult shape, as are most of the budgets of the states in the United States. But we can see that in detail if you take a look at the data here. And this is the actual and the predicted revenues for the fiscal year 2010, which is the fiscal year that we're in right now. We're now in May, which is the 11th month of the fiscal year. The fiscal year started in July. And what you see there is the first column. It's the actual revenues. And then the next column is the budget forecast. That's the forecasted revenue that we made when the budget was written back in June. And then the December forecast. And what I want to show you is the last couple of columns there. Take a look at what was happening in the first few months of the fiscal year. July, August, September, October, November. Look at the difference in the actual revenues from the forecast, from the budget forecast. We were down 77 million and 12 million and 162 million and 64 million and 141 million, $400 million short of forecast in just the first 5 months of the fiscal year. And at that point, we realized that the budget forecast had been too optimistic. And so in December, on December 15th, the forecast was revised, and the revised forecast knocked about $1 billion out of the revenue forecast for fiscal year 2010 and another $800 million for fiscal year 2011. The scary thing was, in the first couple of months working under the December forecast, you can see in January and February, we fell short again. We were almost $75 million short of the December forecast in January and another $85 million short in February. That's $160 million below this very dire December forecast. And at that point, we were wondering, when is this going to turn around? When are revenues going to bottom out? Well, fortunately, in March and April, we started to come in ahead of December forecast. As you can see, about $48 million ahead in March, and then almost $120 million ahead in April. So apparently revenues have bottomed out, and that's at least a glimmer of optimism about state revenues here in the recession. In total, after the first 10 months, we're about $950 million behind the forecast on which we used to write the budget, but $55 million ahead of the December forecast. So you look at these numbers and you say, is this good? Is this bad? Are we doing well? Are we doing poorly? Should we be optimistic? Should we be pessimistic? And the answer, of course, is both. Let me explain. If you take a look at this next slide here, I'm going to talk about the Indiana budget and where we stand right now as of May 2010. When the budget was written, we were predicting that at the end of the biennium, by June 2011, we would have just over $1 billion in balances. That would be, in a sense, the state's checking account would have $1 billion left over, actually $1,008 million left over. And the December forecast, the December revenue forecast, that revision knocked $1.8 billion out of that 2-year revenue forecast. $1 billion out of 2010, $800 million out of 2011. Well, that uses up the balances and then some, so the end of biennium balances after the December forecast stood at minus $828 million. Well, the state is not allowed to run a deficit at the end of a fiscal year, at the end of a biennium. That would be unconstitutional. And so clearly something had to give. And the next slide shows the first attempts to handle this problem. And in fact, the first attempts to handle this problem were made prior to the December forecast. It was clear 3, 4, 5 months into the fiscal year that we were running far short of forecast revenues. And so the governor began issuing budget cuts, telling state agencies and other state institutions to spend less than their legal appropriation, less than was actually written into the budget that they were allowed to spend. And in several press releases in November and December, the governor cut about $800 million out of the budget. And I've got it listed there. I added up the numbers. It's 809, but there's a little play as to how much it actually is, but it's somewhere in that neighborhood. You subtract that from or add that to the deficit that we were expecting at the end of the biennium, and as you can see, it's minus 19 million, which is essentially balanced. Essentially, with the budget cuts that have already been identified in November, December, we can get the balances down to approximately zero, which would be constitutional. If you look at the next slide, however, you'll notice that this isn't good enough. What we see here is a graph of end of fiscal year balances as a percentage of the state budget going all the way back to 1976. So we've got about 35 years worth of data right here, and you'll see that we've never fallen much below 5% of the budget. Right? That happened once in the early 80s. It happened another time in the mid-2000s. But other than that, we've never fallen below 5%. And 5% is thought of the rule of thumb, rock bottom minimum that you can allow your balances to sink to. Well, at the moment, our balances are scheduled to sink well below that. So you got to believe that the executive branch, the governor's office, the budget agency, is still contemplating additional budget cuts in order to keep our balances up at about 5%. You need 5% just so for cash flow reasons, so you can be sure to pay your bills on time. Just like you don't like to run your checking account all the way down to exactly zero. You're going to bounce a check if you do that too often, and the state doesn't want to bounce a check. So we need to get balances up to a higher level than zero. If you look at the next slide, I've got a guess as to how much that might be. 5% of the 2011 budget is something like $683 million. There's a number of different ways to calculate it, but it's in that ballpark. And that would mean that we would need about $700 million in additional budget cuts in order to get balances up to 5%. Well, if you look at the next slide, of those 700 million in cuts, now we're 55 million ahead of December forecast. And what we can say about this budget is that for every dollar ahead of forecast that we are, compared to the December forecast, that's $1 less in budget cuts that we'll have to make in 2011. So for 55 million ahead, that reduces the amount of budget cuts to only, quote unquote, about $647 million. So what can we conclude from this? Let's take a look at what I call some rules of thumb for the monthly revenue reports. Every dollar above December forecast reduces additional budget cuts in this biennium. If revenues exceed the December forecast by $600 or $700 million during the coming fiscal year, that would be a lot. That would be extremely good. Added budget cuts might not be necessary, but only if we move beyond that could we restore those earlier budget cuts. And so it is not the case that when we come in ahead of December forecast, we can rescind some of the earlier budget cuts. In fact, we need to get well ahead of the December forecast to even avoid additional budget cuts in the coming fiscal year in 2011. Well, if I'm going to have the camera back on me, let me tell you a couple of things that are also going on here. One is that the budget agency is apparently contemplating some fund transfers, $300 million of transfers of money from other funds to the general funds. And if they do that, that would reduce the amount of budget cuts that we would need to make in the general fund by about that $300 million, cut it approximately in half. Second thing, apparently the budget agency has issued a memo to state agencies telling them to plan to cut budgets in the fiscal year 2011 beyond the cuts that have already been made. So apparently plans are being made. No press releases come out yet as of May 2010, but apparently plans are being made. Well, that's the state of the Indiana budget. We're in a deep hole, and more budget cuts are probably in the offing, but at least we can say that revenues appear to have bottomed out. We're in a hole, but perhaps we have begun to climb out. And that's the state of the state budget as of May 2010. I'm Larry DeBoer.